We started with that multifamily property and have had a really, really great experience with it. It's in West Texas, an unfamiliar market to us, and we ended up being very fortunate to get a great team, and it just kind of shows the power of what a team could do. Um, Here in Florida, we have our second property, which was uh, essentially brought to us by one of the oldest warriors in Broadcleave's group, which we'll get into it here in a second. But I'm really excited to tell you a little bit more about this. We call it the Aero Treasure Coast Storage, or Aero Storage for short, and it's 650 units of storage facility in Vero Beach. So, like we said, real estate is very much a team sport. So I'd like to talk a little bit about our sponsorship team. So Edward Zell is our founder and KP. He is essentially the person who has the most experience, who brought the team together and ultimately looked at the deal for the first time and said, "This is the first deal in 2 years that I'm willing to go after because it meets my criteria." When we heard him say that, we're like, "That's probably good enough for us too, right?" And he's one of the oldest warriors, longest running warriors in the group. So that really has a lot of weight with us. The next four people, Andrea, Ben, Lyle, and Isabel, make up Diamond Asset Management. This four-person team is essentially involved in the sort of day-to-day operations, the initial underwriting, the property acquisition, et cetera. All the kind of nuts and bolts are these four people. They have 800 assets total under management, not including this. And ultimately, we were brought up to help the capital generation aspect. So they reached out to us and said, "Hey, we need money. Go find the money, and we'll give you a slot on the team." And so that's ultimately how we ended up here. So let's talk a little bit about the property. So you can see some pictures of it. You'll see a variety of pictures throughout the presentation of it. But Aero Treasure Coast Storage is 650 units, which is made up of 292 classic units and 341 climate controlled units. So over half of the units are actually AC. Which is nice. And we also have 17 billion RV spaces, which it turns out is actually somewhat unique in today's storage market. The total purchase price for this was 6.4 million. We're raising about 2.2 million of actual equity. The hold period for this is 5 years. We're doing a traditional 70-30 investor split, and we'll get into the projected returns on this. But essentially, our minimum investments on this deal have been 50,000, but we haven't received much more investments on that as well. So some of the features of the property, there are two locations separated by about a mile and a half of distance. 10 buildings total with all exterior drive-up units and all one story. Originally, I thought, higher stories means better, but when in relation to storage, you really don't want to move your stuff upstairs and take it in elevators and whatnot. So the fact that all of our units are on the same, single story is actually a benefit, which was sort of unexpected to me, which I really enjoy. We've got an on-site manager full-time, a very, very solid occupancy. When we took this over, it was at 93% occupancy. It had been for the last 3 years, despite the previous owner not doing any marketing efforts, which is shocking. But it really sort of reinforces the location of this facility. And you'll see where it is. Just out of mind has really been responsible for the very high occupancy. And there's more opportunities to add value here. So what's the current situation? Well, it's four kind of main things. The first is that this is a mom and pop operation. Again, no marketing. Basically, two dudes who bought this 20 years ago and said, "Hey, let's just see what this will handle." And then the surrounding area sort of gentrified. Your beach got a little bit more popular, and they ended up with a really, really good property. One of the owners passed away, and the other wanted to cash out. There is a bit of a probate situation. The son of the owner who passed away has no interest in holding it, and so he basically told us, "Look, if you could give me the right price for it, we'll pay it off your hands, and I don't want a piece of that." Rents are currently 15% below market rate, and they hadn't raised rents in the 3 years leading up to it. So last time they raised it was like mid 2020, so right around the time that COVID happened. And I think just with their connection to the RV, so like, we want to be, generous to the people there, but, quite frankly, the market sort of recovered from that. You gotta stay with the times. So that's our responsibility as the new owners to come in and not only upgrade the systems and the quality of life for the tenants, but also to, increase the return on the quality of life for investors. And then number four is that incredible location with minimal marketing efforts, which again we'll talk about when we get to the location. So what are the real investment benefits here? Well, first off, Investment itself has outstanding returns in terms of what a syndication looks like, in terms of average annual return on cash on cash, etc., which are sort of the normal metrics we use in a real estate deal. Consistent demand regardless of economic climate, just because of the nature of self-storage, low monthly expenses, and many additional income opportunities that the previous owner was not taking advantage of. A massive rent growth increase potential, like we just talked about, 15%, below market rent, and then easy evictions and rentals. Self-storage have month-to-month contracts. That means getting in and getting out and making adjustments is much more simple than in multifamily. So let's talk about the market. It's Vero Beach, which is in Florida. We all live in Florida, so I don't really need to sell us on this. We love it. There's a ton of things to like about it, and we all love the no state income tax. But one of the nice things about this team specifically is, with Vero Beach being here, myself and Eric live within an hour and a half distance from it, which means that we play a key role. We're out to the site, once every other week or so, and sometimes more when need be. And that sort of boots on the ground feel has actually made a big difference. And we've probably been there 6 or 7 times in the last 2 months. And actually, we walked around with Richard one time. He just asked us to come out there, driving all the way to Fort Lauderdale. Thanks again, Richard, for that. But ultimately, Vero Beach is a great market. Low poverty, low unemployment, high growth potential, big diverse employer base, and just a real insane median income growth since 2000, much higher than the rest of the country, and it's landlord friendly. So we really like it as a market to invest in. There's a lot of stuff to do there in terms of amenities and sort of things for new people. So people aren't just willing to live there that are from Florida. People like to migrate there too. And each of these lodges represents a specific industry. And so when industry makes up more than 20% of the market, that means that the market is diversified. So we like to see that too. So here's the location of it. That blue rectangular box there is where it is. It's right next to Vero Beach Regional Airport, Vero Beach Sports Village, which is a large athletic complex, high-end residences, and just a few minutes away from downtown. So you can see the location of it is just, it really sells itself. So the business plan and growth strategy, let's talk about that. So here's the unit mix. This is kind of a lot, but essentially you can see here are in the first location, there are 278 units. You can see the breakdown, everything from 5 by 5 up to 10 by 25, and sort of everything in between. You can see sort of like what their incomes are and whatnot. We have the second location here, which is made up of 372 units, which brings, again, the entire total to 650. It's a lot of numbers, a lot of data, which I'm happy to cover after this, but just in the time together, just burn through it. But the growth strategies here are really twofold. We want to improve the GPR, which is gross potential rent, through the strategies that you see here, increasing rents to market value, offering high margin retail and insurance offerings, improving the property's code appeal, etc. Right? So here we have a really, really detailed business plan, which we are currently in the process of executing. And so in our first year, our gross potential rent is, just over $1 million. And by year 5, we're predicting that conservatively our gross potential rent is going to be over $1.4 million. So you can see, about a 40% increase. And, that could be as high as 70% if we do the right things if the market grows. The next, metric that we're looking at is net operating income. And so year 1 NOI over year 5 NOI. You see a similar kind of thing here. And again, this could be as high as $900,000 or $1 million if we get the right market details and our business plan goes to plan accordingly. So the deal structure is like this. The purchase price is $6.4 million. We're taking over $4.3 million in debt. We're raising $2.2 million in equity with a $50,000 minimum investment. Our investment term, we're expecting this to turn around in 3 years, but we have to say that 5 years is sort of our general time frame just because that's kind of which structure the contracts. We have a 65% loan to value and a fixed interest rate, and we closed on August 6th. So we are still raising, but we're closing that gap, and we've already finished, hiring a property manager, take out the old one, and have executing the business plan. Which the first and foremost thing for us is that all 650 units were being paid manually. Like people would drive up with checks, labor contracts. It's crazy, crazy. So the first thing was like, okay, day 1, new property manager, you come in, here's the system that you're going to use. And let's get these people playing with the market. So metrics that we look at, anything that is above a 2.0 equity multiple, really anything above like 1.8 equity multiple is attractive in our eyes. So what does equity multiple mean? It essentially means that by the end of the deal, what is your money done? If it's a 2x multiple, then your money has doubled by the end of it, right? So cash on cash returns, similar kind of thing. Basically, if you put in, say, $100,000 and you make, $10,000 back, your cash on cash return is 10%, right? So we use these sort of metrics to kind of give us a guide of how valuable this deal is going to be. And this one was really, really fantastic, especially with the average annual return over 20%. And we'll show you a little bit of how we got there. But ultimately, if we were to take a look at a $100,000 investment, here's essentially what that would look like. So in year one, and essentially, what this means is that, when you put in your $100,000, you become part owner in the property, right? You're not just giving us the money, we're just promising that we'll give you it back. You contractually, you own a piece of the property as a limited partner in the deal. And so what that means is that every time rent checks come in, we divvy up all the remains, and we, add them appropriately depending on who owns how much of the company, right? And so in year one, we make 5.4% back, 7.2, 7.8, all the way up to the end of year five. We can add that up. Essentially, you've made back 38.2% of your investment. And then when we sell the property, the proceeds from the sale is 71.8%, right, or 71,800. So you add all those things together. You get your initial 100,000 back. You get 71,000 at the point of sale, and you generate 38,000 over cash flow. So the whole $100,000 investment turns into 210 at the end of the 5-year period, or 3 years, depending on how quickly we're able to do it. So the investment process and what to expect. We do a really, really easy, user-friendly investor portal called Cash Flow Portal. Essentially, this is a one-stop shop for all of your investment needs. Pictures of the property, showing where your money is going, essentially all of your contract documents, everything you need to sign, your K-1s, all that kind of stuff. That can be found here. And we've used it on both our Texas deal and this deal, and getting your investors in and signed up and stuff, it's just a breeze. I mean, it really makes a lot of manual, difficult proceedings very, very simple. And I truly would continue to use Cash Flow Portal just from our experience and all of our other deals. And also, when we actually go in, it's a little bit more permanent on like a multifamily deal where we do renovations, you can see like before and after pictures and whatnot. For this one, there's not really a whole lot of renovations that are going to happen. It's not really for the business plan, but that's kind of how the Cash Flow Portal works. So even if we paint the doors or, hire a new program and we'll take a picture of it, you'll see it in the Cash Flow Portal. So that's my brief presentation, and that's, storage. What video? I don't. What video? Or that video. We didn't talk about that.
See it. It's like a private screening.
Yes. And then also back to the Cash Flow Portal, if you guys want to dabble a little bit more, that QR code in the top corner, perfect. And then play around with it. Our parents were lucky to have our parents on one of the investments, and they're not tech friendly at all. And if they can do that, you all can too. So it's pretty simple.
Can I ask a quick question?
Yeah.
Absolutely. So the goal is, I guess you've already purchased this place, but it's simple. So basically to build it off for the next 5 years and then sell it. And then right.
Exactly.
But from the right side, looks like you charge a lot more. These units over here are more expensive than most.
Oh yeah.
And that's just for miners.
Yeah.
Federal each of the same.
The 15% thing is really like the minimum amount. I mean,
Go on Colonial, yeah, it's like $300 or something for a small store.
Yeah.
You guys are being conservative.
Yeah.
It's a basic idea, assessing the risk and I used to have a lot of guys that always sell stores over here.
yeah.
A lot of deals under the table, if you know what I mean. They bring stuff to people. They can have.
Yeah. We definitely, quite frankly, during the takeover process, we've learned that some under the table things, you know, and and I think that that's really our responsibility as the new owners to sort of like expose all those things, clear them out, and then just clear the name, so to speak. You know,
What's really hard about the Warriors when it's all over the country with all the defense profits, we're taking underway for the next building, the next 19, 20 financial crisis. Everything is going pretty conservative. So we have to be because there's so many layers, right? So that's one of the things that drew me to the Warriors group. And they might look at 100 group kids and like, yeah, I'm going to do it. The Warriors
That is-
share it the best of what's in yeah.
Yeah. So, quickly, at 10:46 of your time left, and then, we're not movie stars yet, guys, so this is the first take, and, we're actually doing this for all our videos, for all our properties, and it's gonna way better every time.
Sure.
Hopefully the sound works.
Everyone gets Peter Ryan here with EST. I mean, Eric and I are super excited to talk about how we're taking this Florida facility. Your story here in Deerfield, Florida. Next 615 facilities and a totally fantastic rating for Milwaukee for today. Let's get into it. Full-time contract. This is your non-electric. Day in, day out. You're we have I left my all the way to my it's
Good.
That's pretty amazing. That's great.
You get the gist of it.
Yeah.
Sumo suit for the double